the biggest secret rich people and investors do not want you to know. And I've been asked by a couple of them not to make this video. They said, why are you going to be sharing this kind of secrets with everyone else? Keep it for yourself. They don't need to know this, but I'm going to share it with you anyways. It's applicable for the United States, Canada, and probably the rest of the civilized world too. This is how they make an incredible amount of wealth. This is how they make a ton of money, and they get richer, and well, poor stay poor and rich get richer. The secret about real estate, and I made a shorter video about it. If you want to watch the short video, I'll leave a link in the description of this video. It's like 1 minute, but if you don't understand something in that video, this video, watch it till the end. I'm going to thoroughly explain everything to you in a relatively short period of time as well. Here's what they do to make a lot of money. And a lot of money. I'm not going to say that word, I don't want to get demonetized. So here's what they do. First of all, they take a loan at a negative interest rate. A negative interest rate, that means is that current inflation rate, even if you look at it, it's below than it would actually is. The reason for that is the government they under-report on inflation. They don't want you to know the real inflation rate. When was the last time you went to groceries? Have you seen the prices almost doubling? Like, you see the meat prices in Costco right now in Canada. Do you see the prices for groceries and how expensive the cars are? A used one? Like, look what's going on with the market. It's just insane. And inflation rate is only like what, under 7%? Whew. Is that true even? And the interest rates are still lower than that. So in short, the rich people take loans that are based on undervalued inflation rate, which are negative loans. In short, they're getting paid to take the loan. And this is not secret, guys. The secret is the information I'm giving you. Because the secret is how you use this information, and it's out there. It's just that rich people know about it, poor people don't even guess about it. So they take that loan at a negative interest rate. In short, they get paid to take the loan, and they buy real estate. Now, lots of poor people are thinking that, yeah, the prices of real estate go up and I get rich. If I have real estate, it appreciates in value, I make the money. That's not how the rich people think about it. That's not how they make money. Okay? They don't look only at the growth of the value. Of course, it's a nice cherry on top of a pie, it's good. And by the way, guys, in terms of interest rates, I'm going to explain to you, if you're searching for a mortgage anywhere in Canada, my wife is a licensed mortgage broker. She is Nito Realtor with DLC Clear Trust Mortgages. Her contacts will be in the description of this video. I also leave a free calculator that you can pre-qualify yourself to see how much loan you're qualified for. So it's basically pre-qualification tool that allows you to see with your current income and debt and everything ratios approximately how much you can get. It's not a pre-approval, but it gives you a really close idea on what you might be able to get with what you have in terms of buying a property. Now, myself, I am a realtor with eXp Realty in Calgary, Alberta. And if you're looking for a property in Calgary, Alberta, my contacts in the description of this video. And if you're searching for a property anywhere in Canada, I can connect you to the right agent. My contacts are also in the description of this video. Now, let's continue. Here is the situation. The rich people who are buying the property, they're looking at it in this way. First of all, they're not looking at the entire debt as a debt. Okay? They look at, let's say, how much money are you putting down for your own residence, let's say you're buying for a property. $25,000, let's say, on $500,000 house. So you're only putting only $25,000 to get that property. And if it has a basement, you can rent it out and you can have people pay off your debt. That's like what I'm doing right now with my property. I have a legal basement suite and I'm running an Airbnb there additionally. It's an additional income. I have long-term rentals, I have short-term rentals, guys. I have a bunch of businesses that are generating revenue for me. And right now I'm in India for a 3-month vacation and I'm still making money. And I'll tell you guys how I did it, and so you can do that as well. So here's what they think about it. They think on that amount. Now, and also they think on the entire amount is not as appreciation of the property, but as a resettlement of debt. So they pay off the debt. So they buy a property, let's say, for 25 years amortization period, and over 25 years, the debt gets paid off, and slowly their wealth, it goes up. Over 25 years of period, it becomes as much as the value of the property. And if the value went up in price, it freaking becomes bigger and bigger as well. And on top of it, they don't pay off their debt. So look how it works. Not only you are getting an interest rate which is less than actual inflation rate, which is negative. So you're literally buying a property and you're getting paid by the bank to buy that property. So you're buying the property, you're getting paid to own the property, and it grows over in value over the time, and you have to pay off the debt, right? No, you're wrong. You don't have to pay off the debt. You can rent it out to someone, and basically you outsource that liability to somebody else to pay off your debt for you. So they're paying off your debt over the time. You don't have to worry about it, and over time you get richer. And what investors look at, and they'll work with lots of people who have 50 properties, 60 properties. They have lots of real estate. They buy, they put it on tenants, they go with private lenders sometimes. You know, private lenders, high interest rates, but they do it only for 1 year. And after 1 year, you guess what they do? They refinance it with an A lender. They go with the major bank, TD, CIBC, BMO, Scotia, whatever in Canada. So they refinance it at a lower interest rate. If they can get it right now, they still get it. In a year from now, they'll buy it right now at a higher interest rate, they'll refinance it, cut down their interest rate, have it rented out with the tenant, make money, cover their debt. Cover their debt and make the property grow over time. Over the long period of time, real estate tends to grow by a lot. So I'm talking about 25 years period of time. And also, the tenant pays off the debt. So, in short, this is how they think. They're like, okay, look, I have this $100,000. It's a big amount, right? Not for them. For you, probably, yes. For me, big amount too. But, you know, for them, it's like $100,000. That's nothing to their net worth. And why is their net worth so much? Because of their mentality of thinking like that. They put it down and they're like, okay, on this $100,000, I am not only paying off my debt, I also have this amount of, let's say, 7% return on investment. And if you do short-term rental, you can go up to 30. With current interest rates, became a little bit more difficult, 20. Doesn't matter. Still makes a lot of money, more than any bank would pay. They get the asset that grows in value over time. The debt goes down over time. And over time, they get richer and richer, and somebody else is paying off their debt. This is the secret, guys, of how wealthy people make more wealth and how poor people who say rent is better, who are saying that, oh, there is a scientific evidence saying that the rent is better, renting, then they turn up by 70 and 60, and they end up going for their, you know, Canada, what is called, guys, all of those CPP or, you know, those pension plan and all of those savings account, tax-free savings account, other banks are selling those products in order to make revenue from you. They don't really help you with anything. So you're basically investing into nothing. And if you're broke right now, when you retire, you're going to be broke the same way. In short, even if you're not so broke right now, when you retire, you're almost definitely going to be broke if you don't have any investments. So that's basically how it works. So my recommendation is, think like the rich people do, the way they want you to think. Think about when you're buying a property as the down payment that you're putting is your investment, not the entire amount, because the rest of the money comes from the bank. And if the bank is given to you at a lesser inflation rate, at an interest rate that lesser than inflation rate, they're losing out. So you're basically making money off the bank, making money off the tenant, and the tenants pay off your money. Don't look at the entire amount, look at only the down payment. And that's how you get rich. Guys, thank you so much for watching this video, and follow me for more. We'll see you next video. Bye for now. I'll be in Canada soon, coming back by the end of January from India.